Hello and welcome to episode 12 of Rapid Rundown, AI bubble or AI boom, a $1 trillion sell-off, crypto whiplash, and data that could move the Federal Reserve. That's what we're going to look at today. This is updates for busy investors. And the first topic of today is AI bubble versus boom and global equities. Big tech lost over $1 trillion in market value as investors were considering AI bubble fears, as names like Amazon, Nvidia, Meta, Oracle, Alphabet, and others were hit. For example, after Amazon announced it would spend more than $200 billion in capital expenditure on AI and cloud 2026, far above what investors had expected, its stock lost more than $300 billion in market capitalization. This led to global stocks selling off, led by AI names. However, later in the week, they rebounded as investors were trying to figure out whether this is a normal, healthy correction or part of a larger AI-driven downturn. And the second topic of today is a crypto sell-off and in general just cross-asset risk. Bitcoin fell about 15%, breaking below $61,000 per Bitcoin before bouncing up again. However, this is shaking faith in the safe haven narrative. The $70,000 line is now a key line traders are watching, and if it stays below that, $60,000 to $65,000 is still in play. However, as always with Bitcoin, liquidity and leverage play a big role, so expect to see rapid up or down moves. And the third topic of today is data in the US, the Federal Reserve, and Kevin Warsh. As you might have heard, Kevin Warsh was nominated by Donald Trump as the successor to Jerome Powell as chief of the US Federal Reserve. Markets are seeing the data on US inflation that will come out this week as decisive for the Fed's moves later this year, as markets expect 2 more rate cuts from the Federal Reserve, and the inflation data might confirm this and give a strong indication for this, or it might build a case against this. And the fourth and final topic of today is central banks and the signals they're giving out. The Bank of England has kept rates steady, but has signaled that lower rates could come as early as spring, and the European Central Bank, the ECB, is likely to follow later this year. Big institutions see global growth around 2.5 to 2.8% for 2026, which gives central banks space to move from rate hikes to gradual rate cuts. Alright, and that was it for this week's episode of Rapid Rundown. I really hope you enjoyed. Subscribe for more videos like this one and for videos about quant trading and finance in general. And otherwise, hit the like button, again, smash the subscribe button and the bell, and comment down below what you thought were other important news. And thank you so much for watching.